Ever felt like CRT should work, but it drains your account? I made this exact mistake earlier last year and it nearly wiped me out. Today, I will show you 5 hidden dangers in CRT and how to avoid them so you don't repeat my pain. I bet 80 to 90% of you watching are making the 5th mistake. I'm Victor Snow from Trading from the Soul, where ICT is simplified. Like and subscribe so you don't miss out on future videos. First mistake that caused me pain is not taking profits. This is what I'm talking about. This is our turtle soup, right? Of our one stupid candle, right? You have to sell, right? And you target this row on liquidity. Let's see. And you're in profit, right? Then what? Markets come to stop you out. Most of you will think CRT doesn't work. Like one of you here that reached out to me on WhatsApp crying that trading have really messed him up. I want you to pay attention from now to this video's end. I was in the same mess earlier last year, which I didn't understand the main threshold of our one stupid candle. Before this video end, I'm going to be sharing a trick that will allow you to stay ahead of 90% of traders using CRT. This is what the main threshold of our one stupid candle, what it looks like. It is simply the 50% movement of our one stupid candle. When we draw our fib tool from the candle range low to what? To the candle range high. And this right here is our main threshold. Let's say our second candle in the market made what? A turtle soup. We are to sell, right? Rather than targeting this candle range low for our TP or partials, we can actually target this main threshold right here. Someone watching me will say, but Victor Snow, this is not even up to a 1 risk to reward ratio. This is poor risk management. If you use one of the sniper entries I've been teaching you in this channel, you would have actually sold from this level. Now, check out the risk to reward ratio. It's not always like this risk to reward ratio. So I'm going to be linking the video I explained this up here. Let's go to the chart to backtest this. This is 4 hour time frame USD JPY right here. What can you see? This is our short term low. This is another short term low right here. I told you guys that whenever we have a structure in between 2 short term lows, and we can call it an intermediate term low, and it will always carry a fair value gap signifying institutional participation in the market. This is where we want our CRT to form right here. This candle that dropped into this zone is our one stupid candle. I'm gonna mark out the low as a candle range low. This right here is where I anticipate a turtle soup, which can you see we got it. I will then move to the 15 minutes time frame to use any of the entries that I taught you guys. Which number one, we have what this change state of delivery right here. We can mark out an order block and make an entry stop loss. I can return back to the order block. Rather than targeting the high of this one stupid candle, the candle range high, we can draw our fib from this low to the high to get a main threshold. We're going to target this main threshold. Let's see. Can you see? Smash TP. Now let's imagine we didn't take partials right here and we're still waiting for this candle range high to be retested. Can you see how markets would have stopped you out a loss before coming to fly to your direction? This works because sometimes behaves this way because of sometimes institutional participation in the markets is very, very poor during that time range. The idea behind main threshold is that it is the place institutional traders see. Let's compare this to our market structure series. Can you see? Whenever price action fell to displace high, I told you guys that we are gonna be selling to the main threshold. The banks use this to balance their money at the end of each week in the market. Same thing with our candle range theory. But market have to come back to this 50% level sometimes and come to your stop loss level. So if you want to catch this sniper entry, so watch this one step CRT plus market structure entry that turn losers to monsters. I'm going to be linking it right here. The second mistake you don't wanna miss, which cost me pain, is what? Trading CRT in a consolidating market. This is USD JPY, the 4-hour time frame. Can you see from 1st August this 2025 to the end of September on USD JPY, the market have been in a consolidating phase. This is how many times you would have failed with candle range theory. Can you see what? This is our one stupid candle right here. Can you see this is sweep of it? Can you see what? A loss you would have had. Can you see another one stupid candle right here? Here is a total swoop which turned into a loss. Look at how many losses you would have had with CRT right here, and so much more I couldn't mark out. All because you ignore what a consolidation is. When market is neither moving up or moving down, it is moving sideways. This sideways movement you are seeing right here is what we call consolidation. When a CRT forms in this range for us, they provide fake signals for us. The question right now is what? How do we know when we are about entering this consolidation phase? This will definitely improve your technical knowledge about CRT. Is what? Number one, shrinking of candles. Pay attention to the size of this candle. Is it not big? Can you see as we are approaching August, it started reducing? And can you see this one right here? It is so small, which was the beginning of this our consolidating phase right here. Now compare this with what gold charts of this same time period, this same August to September. Another tool you use to know whether market is about to consolidate beforehand is what? Buyers and sellers cancelling out each other. Can you see what? Buyers what? Bought from here, what sellers came to cancel them out. Can you see? If you notice, this is what we have been doing since this August. Multiple cancellation. You can rewind this and compare this with our gold chart. This next one is what? A game changer. It's gonna be telling you exactly when this is about to happen. Before that, give me a thumbs up and subscribe right now. If you're learning something new, is using the average true range indicator. This is what your average true range looks like. You go that by clicking the indicator tab and we search average true range. And this is our example of USD JPY. Can you see the time this big candle was formed? Our 80-hour value was high. After that, can you see how what the value of this our 80-hour, how it started falling as we started entering the what consolidation phase. So let me know whether you want me to make a video dedicating this 80-hour plus this candle range theory or at once. So this next consolidation indicator will automatically tell you the month this is about to happen, which is during August meeting. During the month of August. The month of August is usually holiday period. Investors used to be on holidays, spending the money from trading. But August this year, this 2025, I didn't trade at all. The last trade I posted on this YouTube community tab was around 27th July this 2025. Can you see? You don't want to miss this third mistake. Ignoring this might, I don't know, blow up your account, which is trading CRT that just approached a PD array. This is what I mean. Can you see this is a candle range theory occurring close to our PD array right here, our rejection block. So traps I see traders fall into is what trying to sell after this total soup was formed to the downside. Look at this example right here. This is our CRT model 1 variation forming after we just mitigated a fair value gap, which is what also a PD array matrix. So you guys that it can be in any time frame, the 1 hour, the 4 hour, or the daily time frame. Let's imagine that this one stupid candle was formed on a Monday. It mitigated our fair value gap, collecting our orders, and it fell immediately. Then on Tuesday couldn't do anything, but Wednesday swept our candle range low of Monday, giving off our CRT model 1 variation. You see some traders trying to buy from here, targeting this what draw on liquidity. This is what's wrong. you most likely lose this trade. Please, if you don't want this kind of stuff to happen to you, watch the one stupid candle that turn losers to monsters. This is very, very important. The solution to this is understanding PD array matrix, as it gave us 14 instructional reference points, and this is some of them. Talked about rejection block and fair value cap. Let's talk about old lows. This is what an old low looks like. An old low is where the last remaining orders are sitting at. He said that it is the lowest point in form of what a weak market got to before climaxing. The lowest point before climaxing. It is the last place orders are sitting at in the market. That if here is unable to hold price, nothing else will. So the solution to this is understanding PD arrays and how they interact with our CRTs. This is what I mean. So traps I see traders fall into is not understanding the two ways price reacts of these our old lows, which we have what 1 and type 2. Displacement is when our candle breaks our old low. So I've seen traders try to buy here, which is wrong. In our failure to displace, can you see how market rejected off this old low and came out forward our candle range theory right here? So we can actually buy from here to the upside. We are going to the chart to take some examples using this, but before that, give me a thumbs up and subscribe if you're getting value from this video. This is 30 minutes time frame of gold. Can you see market recently took out an old high, and this is our old low. Within that, you will see our rejection block. And you see how market rejected off this rejection block. That will be our one stupid candle, and a total sweep of this candle range low will be our entry signal. But we displace it, so we are not going to be having any entry. Also, can you see here we also have an old low and also a rejection block. This candle that entered here will be our one stupid candle. Here gonna be the candle range low. Anticipate a total soup. Can you see this candle failed to displace our one stupid candle right here? I'm gonna be making an entry, stop loss below these lows, and I'll target these highs as my take profit. 1:4 risk to reward ratio. Let's see. We're moving and came back for retracement. Again, can you see we have an old low and rejection block right here? This candle that entered here wants to be candle. Here gonna be my candle range low. Can you see this is a total soup? This is my CRT model 1 variation forming right here. Then you can check the description to watch that video to make you understand this video properly. So I'm gonna be making an entry right here. Stop loss below here, and I'll target these highs. Let's see. Can you see if we take profit for both of our setups? This fourth mistake really made me sad. I knew what I am to do, where I thought that I can do whatever I like in trading, which end up messing me up, which is trading once market starts going below our candle range lows and candle range highs, which is trading once market starts going below our candle range lows and candle range highs. This is what I mean. These are one stupid candle, right? This could be 1 a.m. candle. Let's say market starts approaching this our candle range high right here, and it start going above it. Traps I see traders fall into is they start trying to sell immediately. I've seen most of you all try to do this. Let's see. Can you see this is going in your direction smoothly, but and it comes to stop you out. You get stopped out 80 to 90% out of 100 times you try to do this. Candle finally come to close above this our candle range high. Someone watching me will say, Victor Snow, should we still be selling here? The answer is no. We use our CRT model 3, which I said that when price finally close above the candle range high, we can use our fib mark from the low to the high and get our golden trading zone, and we can trade from here to the upside. Also, we can approach it this way, get a green zone, which is our 0.236, which will look something like this. I bet 80 to 90% of you guys watching me are making this fifth mistake, which is not using the theory of time and price. Time and price theory says that no matter how attractive our CRT looks, if we don't trade it within a specified time window, we are likely to fail. Which the time windows are what? Our London Q zone, our New York Q zone. These guys are just basically specific times during London and New York sections where price will actually reverse from. So the time is 2 a.m. to 5 a.m. Eastern Standard Time for London Q zone. Then for New York Q zone is 7 a.m. to 10 a.m. Eastern Standard Time. But the whole trades I've been teaching you is during this London Q zone and New York Q zones. You can go back and rewatch it. So I'm going to be teaching you guys this with 4-hour time frame. So for this example right here, when our 1 a.m. 4-hour candle was formed, can you see 5 a.m. made a total sweep of the candle range low? Then can you see our 5 a.m. candle displays to the upside? Then for this example right here, our 21 o'clock candle, can you see 1 a.m. candle made a total sweep of our 21 o'clock candle? We ignore it because that's not what we need. But when our 9 a.m. candle right here made a total sweep of our 1 a.m. candle, we sold to the downside. Then for this example right here, our 5 a.m. candle couldn't do total sweep of neither the candle range high or the candle range low of this 21 o'clock candle. It stayed neutral. But can you see what? Our 9 a.m. candle did the total sweep of both 5 a.m. candle range low and 21 o'clock candle range low. This is our CRT model tree forming in our New York section. That is what we are respecting time and price. Can you see how markets displays to the upside? So we can mark out a green zone and trade to the upside. For this example right here, pause this video and figure it out. I would love to know how you came about this at the comment section. Shows you're following up. Go to the chart to backtest this. This is good. The 4-hour time frame. First thing we do is to make sure our chart is in Eastern Standard Time. This allows us to apply the concept of time and price effectively. To do that, click on this that has time in here. I will make sure it is set to New York right here. There we go, traders. We have it Eastern Standard Time. So if I zoom this chart, you see currently we have our wants to pick candle sitting on a fair value gap, which is also a PDRA matrix. And I forgot to mention that it is in our 1 a.m. candle, which is also our London Q zone. Can you see the next candle made a total sweep of this 1 a.m. candle, which is also our 5 a.m. candle. So I can confidently make an entry here, top loss a little bit below there. So rather than targeting this candle range high, I can target this old high in the market, which is also our PD array. Let's see how the trade unfolds. Boom, a bloody volatile candle. So this is the power of using time and price effectively. So we've come to the moment you guys have been waiting for, the bonus mistake. This secret hack I'm about to share with you right now shouldn't be out there. Why? I bought a course when I started CRT, and I wasn't taught this, but the mentor there who was actually using this, I don't know, he refused to share it for some reason, I don't know. But working with him, I figured it out. Before I share it, I want you to give this video a thumbs up so that this video can reach out to more people that are using CRT, that have been blowing accounts with it. Have you done it? Fantastic. This right here, this is how market moves with CRT. It starts from what? A low. Before it moves, it will form a CRT model and it will move up. Then when it gets to a high, our CRT model was formed. This is our wants to pick candle total sweep. What? Funny thing is, we can actually make a sell to the downside, and we target what? A PDRA fair value gap. And can you see, when we go to our fair value gap right here, what formed here? Another CRT was formed here. Can you see? which you could have made an entry here after the store to soup right here, stop loss below here. This is where it gets exciting. Rather than targeting a candle range high, we can actually target what? Old high in the market, increasing both our win rate and our risk to reward ratio. Can you see what? We will finally go to a high. This is our CRT model 2 forming right here. So we can actually sell from here to the downside. I want you guys to understand that losses, they are part of trading. Because I see traders being all emotional and reverse trading after taking losses. I want you to understand that trading is actually a journey that you have to learn and unlearn until you finally get it right. So if you're currently struggling with trading, I want you to know that you're not alone in this. Don't take losses that you end up losing yourself. But I've come to realize that success in trading is not found in avoiding losses, but it is forged through surviving them. Give this video a thumbs up and subscribe if this video really helped. And we have a playlist dedicated for CRT that will teach you how to trade CRT from the beginner to advanced. You can actually click on this video once to pay CRT plus structure entry that turn losers to monsters to start.